Hello ladies and gentlemen, welcome back to another episode of this public investment playlist series. If you follow this channel for quite some time, you know that each month I publicly disclaim my investment decisions on this particular portfolio that we created from scratch a while back, like in January of 2022, and as always is not investment advice. I do me, you do you. I'm just here a random guy on YouTube. I use this as a time capsule so that in a few years I can look back and rewatch these videos and think, oh, this was a good decision, or maybe this was a terrible decision whatsoever. I have other portfolios that I publicly don't disclose. I just wanted to create this as a theme of conversation for my friends, so every month they see me investing on this particular stocks, and it's a good topic of this discussion when we hang around. Having that said, let's open the portfolio. I'm using the Trading 212 app, and right now the total value is 2,866, as you can see here in the big number, and we've invested so far 2,344 euros, which gives us a total return of over 500 euros for a 22% return, which is actually not bad, but this has not always been the case. Actually, a while back we managed to briefly surpass the 3,000 mark. You can see here in 12th of April, but if we go back, you could see that we really started way back. This is February of 2022. I cannot go back because my finger cannot reach the other tip of the screen, but you can see here the portfolio was down, and not always I will open up and do these investment videos or updates and it's in the green. You can see here in October 2022 we were down 8%. You can see here in January of 2023 we were down 10%, and lately the market has been behaving really well, and you can see here it starts to disconnect. So the dotted line, I don't know if you can see it on the screen, it's getting more distant, which is the money that I invested, from the blue one, which is the total value of portfolio. So if I were to sell all of my stocks right now, I would be having a really nice return. Of course, I would have to pay capital gain tax on this, but the goal of this portfolio is for the long term. You can view this as another a backup emergency, like a retirement plan, whatever, because I don't need this money right now. We can see here some of the stocks that we invested in the previous months. Alibaba is a bit down, Google is up, Amazon is up, Farfetch went completely bust, so this was a horrible decision, but since we constantly invest every single month, this doesn't really affect me at all. We have the bulk of the portfolio being the ETFs, and let me see here the allocation so it's easier for you to see. So the biggest portion of this pie, which represents the total portfolio, we have 14 different stocks or assets, because some of them are ETFs, so a basket of stocks. The biggest one is the S&P 500 one, so almost 25% of portfolio. Then we have a really focused portfolio on information technology, 25%. This is also due because this one is appreciating more than the other, so as the time goes by and the effect starts compounding, it will become a bigger portion of portfolio. The same is happening with some of these individual stocks, such as Google, that you see here on number 3 spot, so it has really appreciated a lot, as well as Meta platforms, and you can see here all of the distribution. Let's go have a quick, and sorry for the fast-paced videos, I always like to keep this quick, easy and fast-paced, so that it's not super boring and super extensive. If we had invested all our money in January of 2022 on the pie that we created, we'd have a return of 15%. Let me just quickly check what we did. So yeah, basically we only invested 50% on the S&P 500, 25% on the information technology sector focused ETF, Google, Amazon, Alibaba and Tencent. And these pies have been changing a lot throughout the month, so I vary my strategy accordingly. In the beginning I was investing more in broad ETFs, now I'm focusing a bit more in individual stocks. Actually, I shouldn't say this because lately the market has been so exuberant that honestly I am getting no ideas to invest in new companies, because I feel like everything is overvalued, so I'm just dollar cost averaging into ETFs. So most of my contributions, this is pretty boring. I'm distributing to a basket of stocks instead of choosing specific individual companies in the way. So if I had invested all my money in August of 2023, we would actually be down. And yeah, this was the month where 15% of it was to Farfetch, so that was down 15%, and the rest is also more or less in the green, except Chinese stocks, which for me are the only things that are kinda undervalued at the moment, but at the same time you can attach another layer of geopolitical risk, let's put it in that way, when comparing to US stocks. And the pie that we invested last month actually is also down 1%, but this hasn't given enough time to really compound, and the ETFs are down, so I'm gonna double down on them. On this month, Alibaba is a bit up, Disney is down as well, and okay, so I already created the pie, so essentially we will be investing 30% in the S&P 500 information technology sector, and this has a lot of big companies that you know, like Apple, Microsoft, Intel, Nvidia as well. So this is very focused on the information technology sector. The second one, the S&P 500, is distributing that allocation for the 500 biggest companies, so it's a broader one. And I'm also investing on another one that is FTS All World, which has like over 3,000 stocks, so this is really broad. Potentially this could mean that you have a lower return because you're exposed to a lot of companies, but eventually it will average out. Of course, when you invest in an individual stock, it can go really well, like it was the case of Nvidia, or it can go really wrong when it was the case of Farfetch. It all comes down to your risk appetite, let's put it this way. So 45% ETFs plus 10%, 50%, over 50% of my allocation for this month, because I'm not getting any cool ideas or good bargaining options, so I will allocate to the ETFs for the sake of continuing this strategy and the sake of consistency. Then of course I'm investing in Disney 10%, Alibaba 10%, JD.com 10%, and this is going to be like, you just need to wait a few months because Chinese stocks are really down, and maybe they will never come back or come to the valuations that I'm giving them, but only time will tell. And if you follow this channel for enough time, eventually I will come with an update. Right now we're opening and the portfolio is up 20%, but maybe for the next 2 years it will be down 10%, and then or 50%, and in 10 years, for as long as I can keep making these videos and contributing for this specific portfolio, we will see the results. It's all about a question of patience and sticking to your strategies. Of course, along the way you will do some kind of modifications like I do every single month for the pie that I'm doing. So let's go invest. This month we will be contributing 150 because I said to myself that we will be upping up my contribution monthly, even though the market is, for me, it's a terrible time to be investing because everything seems so expensive, but I have to honor my words and the strategies that I define, and here we are. Because some months before I also said everything was super expensive, and as you can see, consequently in the following months the stocks have appreciated, and if I leave my money in my bank account, it was just losing value to inflation. It's a funny world we live in. So you can see here the 150, like 15% going to Disney, 7.5 is going to Facebook, 7.5 is going to Google, 15% to Alibaba, and you can see here so on and so forth. So confirm buy, and not all the stocks execute when I am doing this video, and when I post my updates on Instagram. Right now 89% is executed, but by the time you see the next video, everything executes. This might take a couple of hours. It depends which stock exchanges are open at the moment. So we have just invested. Okay, so this time we managed to invest all of the contribution, and right now we are back to the 3,000 mark. Of course, consequently, our return now is 20% because we just invested this money, and right now this pie is probably like in 0% or 0.02 negative percent. This is very common that happens. And here we are. Let's see the allocation. It shouldn't have changed much because 150 and 3,000 right now. It shouldn't make a big dent, especially because I'm going more or less in line with the contributions or the distribution that was here before. Thank you all for watching, and I'll see you next time. Bye.